Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. Well, what's happening? It's been increasing over the last 50 years since the government has been getting bigger. Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto. This is your week daily morning show where we bring you the latest in Bitcoin and cryptocurrency technical, on-chain, and fundamental analysis. And in today's episode, we are going to be talking about Bitcoin because, as you guys are aware, Bitcoin is currently sitting right on the very verge of a very large, massive breakout. And if we are able to see Bitcoin break about $24,000 confidently, if we're able to see Ethereum breaking well to the upside, if we're able to see the total market capitalization charts for cryptocurrency breaking to the upside, then we very well may end up seeing a large break for Bitcoin up to $25,000 and beyond. But much of that is going to contend based on the major hike that we're going to see coming in tomorrow from the Fed. I shouldn't say major because the idea is that it would be minor. We're looking at more than likely a 25 basis point rate hike. And if we do have a 25 basis point rate hike, that is going to be an extremely helpful movement for the market. Is this going to be a buy the rumor, sell the news event, or are we going to actually end up seeing a major change in Bitcoin where it drops or where it rallies? Is this really going to have a big impact on crypto or not? We're going to be analyzing all of that and more in today's episode of Coffee and Crypto Live. So let's go ahead and read some chat. I really appreciate all of you guys for tuning in. Oh my is in chat. Said, good morning, fam. Hashtag FinSov. Hashtag FinSov indeed. Guys, my brain is just going crazy with all kinds of ideas of things that we can do this year on the channel, and I'm really excited for all of it. Crypto Ben Franklin in chat as well said, good morning, everyone. Hope all is well. Doing pretty well. Really appreciate you guys for tuning in. Fieros 16 said, yo, what's up? We got Carter Mason in chat. Said, aye, let's go. Jebb is live. Hello. Ricky Rivera is in chat. Said, good morning, Jebb and family. Got Mike Lowry, the blue name, in chat with the wrench next to him, making sure the chat is clean. Said, good morning, everyone. Hashtag FinSolve. You guys can't see it because I have it up on YouTube myself. I don't really know what's going on, but many of you have red names. I'm not really sure why. I don't know if that's something that YouTube's doing, like, hey, look, these people are in your chat quite often, or I don't know, because like I have the stream up on my phone. It's not showing up on my phone, but on YouTube Studio, in fact, I guess I can just go ahead and show you. Your names are red. I'm not really sure why. If anybody knows why your names are red, then go ahead and tell me. It seems like YouTube has updated something for the back end for the actual YouTubers themselves. Puddle Pirate Adventure says, good morning. We go long or short today. What's the plan? That's what we're going to talk about today. Kansas City 100. People are very pumped for the Chiefs. Jeremy Shorter in chat said, good morning all. Hello, Jeremy Shorter. We've got Mike Lowry in chat also. Did we ever figure out if that was actually Elon Musk in the chat last week? I don't know, but what I did see is that another channel that I have been following for quite some time, you've probably heard of him, his name is Graham Stephan, just did a house tour with Elon Musk. I think he did a house tour with Elon Musk of his little $50,000 tiny home. I don't know if he toured a similar house or if he was actually there with Elon Musk. I don't know. Check out the video. Graham Stephan makes some great content. Nate said, let's go, Jebb. Prayers for you and your family. Thank you, guys. We know that we have a God who listens and answers prayers. Sometimes he answers with the word no, but he does answer them, and we're so very thankful for all of the prayers that you guys are sending our way. Good morning, Jebb. Pray you are blessed. Thank you so much. We got Marty and Macy said, let's see. It's kind of hard for me to tell what the red and green, what the green names. Now, I know your names, but we got Win Peoples in chat. Said, good morning and God bless all. Let's see. Yeah, so really appreciate everybody in chat. It most definitely wasn't Elon. He wouldn't be shilling ADA in chat. You never know. He shills Dogecoin, so you got to just keep that in mind. Cardano stablecoin DJed just went live this morning. That is big news. Thank you for the super chat, Enoch. You walked close with God. That's Enoch in the Bible. Was it Enoch? I think it was Enoch that walked close with God and was taken. Anyway, we're going to jump into the stream. Really appreciate all of you guys for tuning in. Let's go ahead and jump on to CoinMarketCap. As you can see, Bitcoin is currently trading at $23,117. And even before we go too far, let's just make sure that we have proper context for everything. At the moment, Bitcoin is up 39% year to date. It is the 31st day of January, the first month of the year. We are only 1 month, almost exactly, into the year. And year to date, we're up 40%. Ethereum is up 32%. Binance is up 27.75%. XRP is up 18.5%. Cardano is up 53%. Matic up 45%. Solana up 141%. So when we're looking at the chart, and we are going to look at the chart, when we look at the chart and we say, come on, Bitcoin, let's get above $24,000. Come on, faster. Come on, rally, rally, rally. And essentially we're being impatient because the market has rallied exceptionally over the last 31 days, and Bitcoin over the last 90 days is even up 13%. It's even higher than its former plateau right before FTX went bankrupt, because if you remember, FTX went bankrupt almost exactly 90 days ago on November the 8th. February the 8th will be 90 days. So since this time, right over here, October 31st, we are up still on Bitcoin 14% nearly. On top of that, total market capitalization is sitting at $1,050 billion on CoinMarketCap and is currently sitting at $1,004 billion over on total. So we are maintaining our support, and in a way, we are also setting gradual higher highs and higher lows. So let's just make sure that we have our patience and we don't get ahead of ourselves, because the fact of the matter is, if we start to get impatient with Bitcoin, if we start thinking, come on, Bitcoin, get higher, then what we're doing is we're training ourselves to be impatient with the markets, and impatience in these markets is one of the most powerful tools that you have for transferring wealth to yourself in the cryptocurrency space. A wise investor, Warren Buffett, you may have heard of him, once said, markets are a tool from transferring wealth from the impatient to the patient. Now, many different people have said that. That's classically attributed to Warren Buffett. Who knows who said that first? It probably wasn't him that actually came up with that. But the point is, the more patient you are in the market, the more likely you are to succeed in the market. That's a maxim, if you will. You wouldn't exactly call it a law, but that's a maxim here in crypto and in the stock market and in real estate and anywhere that you are, that the more patient you are, the more likely you are to succeed. And the more that you use patience as a foundation for your decision making, the more likely you are to succeed. So keep those things in mind. Now, I do want to show you the market dominance of Bitcoin and the other cryptocurrencies, because if you'll remember, we've talked about this for quite some time. Bitcoin and cryptocurrency market dominance has a major implication on the way the market moves here on these shorter to medium term timeframes. I'm not necessarily talking about over the 5-year time frame, but over the 1 week to the 1 year time frame. Market dominance and the shift between Bitcoin's dominance, Ethereum's dominance, and many other cryptocurrencies has a large impact on the success or failure thereof of this market. So Bitcoin is currently sitting at 42.32% market dominance as of 3 days ago when the week clicked over. This is basically a weekly graph. Each one of these data points is on the Monday at the beginning of the day. So this week, right now, we're sitting at 42.32. Even currently, we're sitting at 42.4. So we've actually come down actually we've gone up just a hair. But if we look just back to the very beginning of January, we were sitting at 39.63. So Bitcoin has managed to gobble up almost 3% of market dominance, almost about 2.7% of market dominance, and it's taken that from a multitude of different places. One of the places it has taken it from is Ethereum. One of the places it has taken it from are the stablecoins. You can see ever since then, the stablecoins are down in market dominance. That's significant because ever since January the 7th, you've seen Tether drop from 8% market dominance down to 6.35. Coming here to January 7th, you've seen USD coin go down from 5.32 down to 4.05% market dominance. That's a very substantial drop. And the reason that that's so significant is because that means that people are not exactly taking money out of the stablecoins and deploying them into Bitcoin, but it means when people are deploying more money into the cryptocurrency markets, they're deploying it into Bitcoin. So I hope that makes sense. It's not so much that people are selling their stablecoins to get into Bitcoin, because if you look at Tether and you look at its market dominance chart, we can look at USDC as well. You look at its market capitalization chart. Over the last 7 days, it's actually gone up. Over the last month, it's actually gone up. So there actually is money going into Tether, but it's not going into Tether anywhere near as quickly as what you're seeing happen with Bitcoin. Bitcoin has gone up, in year to date since January 1st, 40%. Tether in market capitalization is up maybe 2 to 3%. Same thing with USD coin. If you look at USD coin, US dollar coin, the United States dollar coin, you're going to look at the market capitalization over the last month. It's actually going down. It's actually gone down about 2-ish%. So people are not really changing what they're doing with the stablecoins a whole lot. It's just that when money is moving into the space, it's moving into Bitcoin and it's moving into Ethereum. And we also still have about $140 billion worth of dry powder in the different stablecoins. You've got the three big stablecoins, Binance USD, USD Coin, and Tether. You add them together, 67 plus 42 is 109. 109 plus 15 is 134. So that's $134 billion right there. Have that math right, correct? Yes, that's $134 billion right there just in stablecoins, not including other different stablecoins down here and other similar protocols that are designed to maintain their value pegged to the US dollar. You can even find those coins by simply changing over the last 24 hours, and they're all going to sit right here in the middle. So you've also got your DAI, you've got your Tether, you've got your True USD, your USDD, your that's the majority of them. But you add all these up, you got $140 billion in dry powder sitting on the sidelines waiting to be deployed. And that's very significant because with Bitcoin's market dominance moving up, a lot of times what that's going to tell people is that if Bitcoin is able to go through a small correction and bounce and then rally, or if Bitcoin is able to just break straight through critical resistance, then you're going to see quite a bit of that dry powder deployed. Because the reason that people put so much money in stablecoins is because they wanted to make sure they had money on the sideline so that they could deploy it into crypto when they found the right time. So one of two things are happening right now. Either one, people are just completely skipping the stablecoins and they're just dumping money into the cryptocurrency market. You're seeing enough shorts causing the market to move up, what have you. Or two, what you're also potentially seeing, and I think you are seeing some of this, you're also seeing people buy crypto with their stablecoins, but then they're refilling their stablecoin reserves with dollars or with euros or with pound sterling or whatever it is. They're maintaining their stablecoin position so they can have it on the sidelines, and then they're buying Bitcoin. Either they're skipping the stablecoins or they're going through the stablecoins where they're buying with the stablecoins and then immediately replenishing them because their market capitalization is staying basically exactly where they are. It's gone down a little bit on USDC, gone up a little bit on Tether, but in the grand scheme of things, moving 2 or 3% doesn't seem to be that much of a movement, especially considering the fact that Bitcoin has moved 40% in the same time frame. Okay, so what does that mean? Essentially, what we're looking at right now is that there is a major shift in the market away from being conservative to being more bullish. There's a big shift in the market away from I don't know. Like, I don't think the bottom's in. I think we might end up going down and seeing another bottom too. Look at this. Bitcoin's up 40%. Wow. It might need a little bit of a correction. Might need to calm down a little bit, but I'm excited. I'm up 40% on my portfolio from what I bought down at 16.2. I'm up 30% from what I bought at $17,500. I'm up 20% from what I bought at $19,500. Whatever it is, people are more in profit now, and people that were at a loss have now either one, they've already sold and that loss is locked in and they're done and they've moved on into a new trade or from the space, or two, if they're still holding on to a negative trade, it's not as negative. So those are the factors to keep in mind. The market psychology has shifted. People are either in profit, they're in a smaller loss, or, and this is what we've seen a lot of over the last 12 months, people that bought at $60,000, people that bought at $40,000, $50,000, there ain't nobody holding on to that to Bitcoin and to Ethereum that bought up at $4,000 on ETH and $50,000 on Bitcoin that hasn't already sold yet, or is bedrock diamond hands not going anywhere for any reason whatsoever. If people that bought at all-time highs were going to sell, they would have by now. However, people that bought down below $20,000 might not have sold in profit yet. And so that's the concern. Are we going to see people selling that are in profit right now? Believe it or not, people still think, oh, we're in a bear market. I'd say we're in an accumulation phase, but fair enough. We are still in a very bearish state, and we have not proven just about anything just yet. But a lot of people are in profit right now. Our trades that we bought, if you guys don't remember, we bought it, what was it, 18.2 and 16.5, I think, on Bitcoin. We bought Ethereum down around 1,1300. We bought Cardano. I think we're in profit on Cardano. I think we bought it 32 cents. I'd have to go back and check. I don't remember the entries. It's been about 3 months since we made those purchases. All three of those investments in those three coins over those two different rounds that we did, they're all in profit. Every single last one of those investments is in quite a bit of profit right now, and I'm going to hold on to them for a long time. So right now, what we're really contending with are the people that bought to make money on the short term rather than people like me who bought down at those massive lows to hold on and make money for the long term. So that's the predicament we're in, is that we've got a lot of factors looking bullish. We're going to talk about the EFFR soon. We're going to talk about Russia-Ukraine soon. We're going to talk about whatever it is that we need to talk about to make the point. The fact of the matter is the battle, if you will, the battlefield comes down to the people that bought at the local lows that we saw, the all-time low or the bear market lows down around $16,000 to $17,000 to $18,000, that bought to sell if they made 30% because they were weak hands, or the people that bought down there to buy and hold for 3-5 years so that they could make even more money, but going back to what we talked about patience, that they would have patience. So that's kind of the question right now. How many people are going to take profit at these levels, and how many people are going to either, one, get greedy, or two, get smart and be patient? Because you can be both of those things and do the same thing. You can be either one of those things and do the same thing. What are people going to choose to do? Are they going to get greedy and say, I made 40%, cashing out, I'm going to go buy my Lambo, I'm out, peace? Or are they going to hold on until Bitcoin goes to $30,000, $40,000, $50,000 or $100,000 like I'm planning on doing? Time's going to tell on that. But one of the things that is going to also tell us about that is our next segment. And we're going to be talking about the effective federal funds rate. So stay tuned, because on February the 1st, which is tomorrow, the Fed is going to be announcing their new rate hike. And we're going to break down what rates are, why rates are important, what the Fed is doing with rates, and why it has such an important impact on the cryptocurrency market. But let's go ahead and read chat first. Really appreciate all of you guys for tuning in. Looks like we've already got 500 people in chat. Thank you guys so very much. Dan T said, red letters in the Bible are the words spoken by Jesus. That is absolutely right. We love those red letters. But I'm not sure what the deal is with the red names. They're like changing color too. I'm just a little bit confused. We got Crypto Smitty in chat. What's up, Crypto Smitty? We got Silent in chat. What's up, man? Monero looks like a sleeping giant starting to wake up again. Very nice to see. I would caution you with Monero that Monero and Zcash and the other privacy coins are going to be one of the first ones that are come for by regulators. Regulators have already started to come for those cryptocurrencies. So just be careful with those, because I'm not saying they're bad projects. I'm saying that the environment, remember what we talked about you have to have the right organism and the right environment. The environment is an environment of everybody's claiming that cryptocurrency is used by people for money laundering. Well, you kind of can money launder with Monero. You know why? Because there's no public record. There's no record really whatsoever of the transactions. So as much as I hate to say it, the regulators are kind of right if they say that you can money launder with Monero or another privacy coin. I'm not saying that the vast majority of people that use Monero would be using it for money laundering. I am, however, telling you just the way the legal system works. If you can use it for criminal activity, they're going to use that against you. Now, that's why Bitcoin being a public ledger is such a beautiful thing, because you can't money launder with it. That's a stupid idea, because it's all publicly retraceable. It's all publicly traceable. It's all in a public open ledger. You just have to figure out who the wallets belong to. Haven't lost if you haven't sold. For the most part, that's pretty accurate. I mean, there are certain examples where that might not be the case. You know, people haven't lost if you haven't sold that bought Luna or BitConnect or something like that. But in general, if it's a good project and there's no fundamental reason to believe that it's going to, go the way of the dodo, then yes, you have not lost yet. All right, let's read a few more chats here and we'll keep moving on. All righty. I bought near the highs like a dummy. I wouldn't call myself a diamond hand, but I ain't just going to sell at a 70% loss. Fair enough. There are quite a lot of people in your position also right now. I mean, hey, I'm in that position too. There's positions that I still have that I bought at, I don't know, $40,000, 40, 50 grand. I bought them fully planning on holding them for years. And I was serious. So they're at a loss right now, but that's kind of part of it. I bought them planning to hold them for 5 years, realizing that in a 5-year time frame, you're probably going to have a bear market somewhere in there. If a government can hide their transactions, citizens should be able to as well. Government is better than individual. I'm not sure I'd say government is better than individual, but what I think, I don't know if that's what you meant. I don't know if I'm understanding that correctly. But what I will say is that I think there should be. Government is not better than individuals. That's what I thought you were trying to get at. Yeah, Press O'Neill. That's giving you the benefit of the doubt there. That's what I thought you were saying. So, yeah, no, I agree. It would be lovely if we had a consistency between what the government is allowed to do and what we're allowed to do. There are a few things that, there's a few things that you shouldn't let people do that the government, like printing, the dollar itself, because that's the United States government's currency. I understand things like, what's the word I'm looking for? Counterfeiting. I understand that being illegal, even though the Fed can create money. But other than that, and a few other exceptions, I would agree. Matt Chandler asking about CT2A. Absolutely, yes, that is something I will go ahead and call today our employee Malachi and ask if there's anything that we can do about that. That's on me. I really do apologize, Matt Chandler. It's been a crazy couple of weeks, but that's not your problem. That's mine. I am really sorry about that. Thank you for the reminder. I definitely do not mind you giving me a reminder on that, because I want to make sure that we're meeting our commitments. Yeah. Sorry about that. All right. Let's see. We'll reach all-time high this year in Bitcoin. That would be lovely. I would love, love, love that. Crypto will decouple from the normie markets this recession. I don't agree. Bitcoin does not exist in a vacuum. I do not agree. Let's see. All right. Cool. Let's go ahead and jump on to Bitcoin and do a little bit of technical analysis on it. And then we're going to talk about the effective federal funds rate. So we're just going to take a look at Lux Algo Premium really quickly here so you can see what's going on in the hour, 4-hour daily chart. Then we're going to move back on to a little bit of news and the effective federal funds rate. We'll call it a day. All right, so Bitcoin is in a buy signal right now. However, Trend Catcher has caught the trend turning red. Also, we are having red EQ cloud coming into play right now. That indicates to us that the market here is... well, basically, we're going through a little bit of a correction. Now, we are trying to break up into the EQ cloud. That's very encouraging. What we're going to want to see now is for the market to break through the center of that EQ cloud and then for it to break through the top of that EQ cloud. For Bitcoin to be considered in a hourly uptrend, I would like to see it above this EQ cloud, which is probably going to be sitting right here around $23,430 or so. We could very well come up here, drop again, set an inverse head and shoulders pattern in motion, and then go through a rally with the neckline right about there. That would push us up to right about, if that did actually play out, to our trend line of resistance at 24K. So that's something to keep in mind, is that we're going to want to see Bitcoin break through in some way over the next 24 to 48 hours, $23,500. Okay, looking at the 4-hour chart, let's take a look at it as well. You can see that we are bouncing off of the center of the EQ cloud. So that's wonderful that we're finding support there. One concern is that we have not even so much as touched the EQ cloud as of yet. If you remember last week, I talked about on the daily chart for Ethereum how Ethereum and Bitcoin looked a little bit different. Ethereum did not manage to break as far into the reversal zone as Bitcoin did. You can see that right here. And Ethereum has fallen out of the reversal zone faster and is pulling back down with a sell signal. That had not as of yet, and has not as of yet, happened to Bitcoin. Bitcoin is chilling out up here more into the reversal zone, but now it's starting to see on the 4-hourly chart something similar take place. We're starting to fall out of the reversal zone, down into the EQ cloud, starting to trade sideways more than up, and we've really kind of completed this asymptotic approach to $24,000, and now we're just kind of, again, the word would be in mathematics, asymptotically approaching 24K. We're continually getting closer and closer and closer, but never actually touching it. And we're just going to have to sit up here and wait until we have a breakout. Now, let's also take a look at the daily chart for Bitcoin, because there's a few things that are very bullish. First of all, the trend catcher is quite high right now, giving us a baseline of support at $22,000. We are also just barely falling out of the reversal zone. We are still very close to it, and we're still very far from the EQ cloud, indicating the market is still very, very bullish. It is possible that Bitcoin could do something on the daily chart similar to what it did on the 4-hour chart, where it falls down here into the EQ cloud and bounces off of it. If it did that, then we could see Bitcoin bouncing somewhere between $20,000 and $18,000. I would expect Bitcoin to probably bounce around 20K if it goes through a correction. And that would actually make a lot of sense. A bounce and a pullback down here with a little bit of a V-bottom, or even if it didn't V-bottom, but we saw the market kind of curve to the upside like this. This looks like one of those modern art masterpieces. You got the one eye, it's all edgy because there's not a second one here. He's got a little lip there. That's kind of what we're looking at here, is we're looking at a modern art kind of bounce. It doesn't make sense, but for some reason it makes a lot of money. That's what we're looking at the moment. I think that you're going to see at this point, if we don't see a major breakout tomorrow on the Fed news, you're probably going to see a correction down to at least $21,500. And you're going to see Bitcoin going through that correction for probably 7 to 14 days. From that point, if Bitcoin is able to maintain above the EQ cloud, if somehow it doesn't go into a confirmed downtrend, and if somehow it can bring this MACD down to a more reasonable level and then bounce and rally again with RSI sitting in comfortable territory up above 50 or so, then we're going to see bullishness. However, if we do fall below the EQ cloud, then that's where you're going to start running into trouble. So let's go ahead and take a pause, read chat for just a second, and then we're going to jump into the effective federal funds rate. If you guys have not already signed up for Lux Algo, you absolutely should. The link to buy it is in the description box down below. It is a wonderful technical indicator. You are definitely going to be glad you have it. You can use coupon code Jebb, J-E-B-B, for 20% off at checkout. Let's go ahead and look at the EFFR after reading chat for just a second. All right. Let's see. Yep, I'm sure it was a paid sponsor. That's like the only coin Jebb and team were shilling hard. What do you mean, Cardano? Or ADAX? Nope, never taken a coin sponsorship. Never done it one time in my entire career. 124 billion. You're right. I'm sorry, Corey. Forgot to carry the one. I have not looked at ADAX in a very long time. Somebody's saying it was a rug. Was it? I lost some money. Man, I'll have to look into that. No, like I said, we've never it's been a firm policy for as long as we've been, because we do take sponsors. I mean, for example, Lux Algo is a sponsor. They're an affiliate link. We do take sponsors, but we do not take coin sponsorships, period. We just don't do it. All righty. Let us see here. ADA repeating January 2021, so February to the moon. Let's see. Let's take a look at that. That's an interesting theory. Cardano definitely did go through a major rally back there in 2021. Basically, I think what you're saying is, let's see. I think Binance is going to be the oldest. Yeah, there we go. Cardano is going through a downtrend, of course, right here. I believe what you're saying is that it's going through something similar to January of 2021. Potentially, maybe. I wouldn't necessarily say that it's the exact same area. I think what you're kind of looking at more of is like this part of the market rather than this part of the market, because what you saw is that the market is breaking bullish above its downtrend like we saw right here. And it's also moving towards the end of a bear market into the accumulation phase, which is where the market was right here. I could see Cardano doing this kind of movement a year from now or even 2 years from now. I could definitely see Cardano going to $10 in the next 5 years. You might think I'm crazy for that, but Cardano has proven that it can do crazy things before. But I don't think that it's in January 2021 territory. The market was in a very different position at that point. We had a huge amount of liquidity being dumped into the market by very large amounts of quantitative easing coming in from the Fed. We had almost no rates, almost no rate market, it was a very different market back then, so I'm not real sure that that's exactly where it's going. All right. Is my name Red Jebb? I'm curious. Weasley T. It is not. There's a bunch of different colored names. Like some of them, I'm colorblind, so this is kind of hard for me. Some of them are like blue. Some of them are green that are not green names. Now, I love green names, but like you guys that aren't members, not really sure. I'm sitting on a fence at the moment. Is the right time to buy Bitcoin or should I wait for a correction? So here's the deal. If Bitcoin breaks above, let's say $24,300, let me just check that number before I throw that out there. Let's look at the chart really quickly here. If Bitcoin starts breaking above, 24,300 is what I was trying to say. If Bitcoin starts breaking above like 24,300, then maybe the one thing is that right above 24,300, we're looking at $25,000 as resistance that we set in August of last year. So the tricky thing is if you're trying to buy for a long position, it's not a good idea to buy for a long when you've already gone through a 40 to 50% rally in 31 days and you haven't had a correction yet. So if you're trying to long the market for the sake of a short-term trade, I'm talking 1 day to 1 month here, I think that would be a mistake. If, however, you are buying to hold for the next year, 2 years, 3 years, 4 years, 5 years, I think now is a phenomenal time to be purchasing. But again, if you're buying for the sake of going into a long position, I think it would be unwise, even though it might work out. Statistically speaking, talking about a risk to reward ratio, statistically speaking, it probably would not be the best move. Okay, so let's go ahead and talk about the effective federal funds rate. As you guys know, the EFFR is going to be being announced in 1 day, 3 hours, 14 minutes, and 4 seconds. 3 seconds, 2 seconds, 1 second. There's a countdown going on. The market is pretty much locked in that we're going to see a 25 basis point rate hike. If you don't remember, we can go to EFFR here, and I can show you the effective federal funds rate over time on the linear chart. What you will see is that we saw a 25 basis point rate hike on about the Ides of March. Then we saw a 50 basis point rate hike coming in towards early May. Then we saw 1, 2, 3, 4 75 basis point rate hikes. Then we saw the 50 basis point rate hike driving us up to about 4.5. Now we're expecting that we're going to have a 25 basis point rate hike that'll drive us up to about 4.75. 4.5 to 4.75. It's a range, but normally what people would call it would be 4.75 as the nominal rate. So the reason that that's significant is because that has had a profound impact on the market in a number of ways. So first I'm going to explain why the rates are being moved in the way that they are, because it's not what people are saying necessarily. And then we're going to talk about the implications, including their implications on Bitcoin. So rates, what are they? Essentially, they are the Federal Reserve's way of controlling one facet of the economy, which is the consumption of the economy. Economies are driven by multiple things. They're driven by investment, they're driven by capital costs, they're driven by production, and they're driven by consumption. They're driven by many more things than that, but those are some of the biggest facets of an economy. The United States especially is a consumption-based economy. We don't build as much stuff in the United States as we consume. We are a net importer and have a net trade deficit with much of the rest of the world. So what that means is that we are basically the consumers of the world factory. We're buying things from Thailand. We're buying things from Mexico, especially. We're buying things from China, not so much as 10 years ago, but still to a large degree. We're buying things from Taiwan, South Korea, when you start talking about more advanced microprocessors and chips. We still buy things from Japan, like automobiles. We buy all kinds of things from all over the world, and many of the things that we purchase in our country are not so much built and designed in our country, even if the companies themselves are American-based. So we're talking about Dell, we're talking about Apple, we're talking about Microsoft, we're talking about all these different products. Much of the production is done outside of the country. This is a country that is very consumption-based, as is much of the rest of the first world. Now, we do a lot of the very low end and very high end, very simple and very complex manufacturing, but a lot of the stuff in the middle, like, a laptop or a microphone, that stuff is typically done overseas due to capital costs and due to the fact that you can send things around the world on a boat and just wait 3 weeks, and it's going to cost a 50th of what it would cost if you sent it by a plane, a train, or an automobile. So we do a lot of the base things. So we drill a lot of natural gas, a lot of oil. We mine a lot of raw ore. We mine a lot of coal. We grow a lot of food. We have a lot of water, if you will, because there are some nations that are net importers of water that don't have it all locally. And then we also produce some of the most advanced microprocessors in the entire world. We produce some of the most advanced pieces of machinery, military hardware in the entire world. Most of that 80% in the middle is done overseas. So we are net consumers. So what the Fed does to regulate the economy is it looks at the economy and says, look, this is a consumption-led economy. This is not as much as it was 100 years ago, a production-led economy. This is more a consumption-led economy. So if we can control the rate at which things are consumed, we can control a multitude of different factors. At least this is the way the theory goes. You can control the GDP. You can control the value of the currency, which is the United States dollar. You can control the way that trade is operating. And you can also set yourself up for economic stimulus during the next crisis. Right now, globally, globalization is in a huge crisis, and globalization has definitely left a lot of people behind, but net, it has improved the quality of life for every single human being on the planet. Even though a lot of people have actually lost money from before globalization took place, their standard of living has actually still increased. Even if their boat has sunk a little bit, the tide has risen enough that if you keep that in mind, globalization, not globalism necessarily, but globalization in a lot of ways has actually helped the majority of the economy and helped billions of people out of poverty. So, if you're trying to change anything about the United States economy, there's a few ways you do it. You print more money to add stimulus to the economy, and that increases the consumption. If there's cheap debt, because the effective federal funds rate is low, basically meaning rates are low, the base rate, which is the EFFR, is the base for credit card debt, automobile debt, home debt, business loans, whatever. If debt is cheap and there's a lot of money in the economy, there's a lot of liquidity, a lot of movement in the economy, then you stimulate consumption, then boom, the markets go up. You see the S&P 500 go up, you see the number of jobs go up, you see more hiring going on, and you stimulate the economy. That's why you hear about things called stimulus packages. You basically print a lot of money and hand it to people so that they can reinvest in the economy. That's where stimulus checks come from. You give somebody $1,200, they go and spend it, boom, the economy's turning again. You're adding more force into that back wheel of your truck, which is the United States economy, causing it to move forward. That's the theory. Now, what the problem is that when you overstimulate the economy like that, the economy then has to deal with inflation, has to deal with rising costs. And then at the same time, about a year ago, you see Russia declare war on Ukraine and completely throw globalization out the window, and we see the Iron Curtain start falling again on the modern world order. So what the United States does is they raise the interest rates so that they have the ability to lower them to stimulate our economy in the event of another crisis like China invading Taiwan, like there being massive food bottlenecks around the world in 8 months when the growing season is over, and there wasn't enough food grown because there's fertilizer concerns, and Russia and Ukraine are basically offline food production-wise, and everybody's hungry, and everybody's mad, and there's going to be crises happening at the end of this year. I'm talking this year. And so the Federal Reserve wants to have dry powder, if you will, of a high rate that they can drop and stimulate the economy. They're not so much doing this to get inflation under control. Inflation is largely getting under control on its own through free market capitalism because it works well. It's a good system. This is helping, in theory, with the inflation. But the theory that the effective federal funds rate is only used to combat inflation is wrong. The main reason they're raising rates like this is to maintain an extremely strong dollar, which is our primary weapon against the Russians right now because nobody wants boots on the ground over there and starting World War III. And also because it allows the Fed to have some kind of tool that they can use to stimulate the economy moving into the next crisis, which could be right around the corner. It could be 3 years from now, whenever. But they have the ability to give the market another set of stimulus like we did at the beginning of the pandemic. We'd already used our Trump card. We had already used the card of low rates, high this pandemic, 2008, 2001. Fall of the Soviet Union, Russia invading Ukraine. Those are all some of the biggest crises in the last 30 years. They normally happen about 7 to 10 years apart, so the economy has time to come back. Russia invading Ukraine happened 2.5 years after the pandemic started, so the Fed had not already positioned themselves in a way that they could combat the economic fallout of that crisis in time. So they're trying to reset everything as quickly as they can so that they have that tool using quantitative easing, but then also using a low effective federal funds rate that they can then raise to combat the negative side effects of the quantitative easing. They want to get us back into that position of low inflation, higher rates, so that they have that in their back pocket again the next time something like the pandemic comes around, the next time that you have to place sanctions on one of the largest oil and gas exporters and wheat exporters in the entire world like Russia. This is not for this crisis. This is for the next one. So that's why the effective federal funds rate is going up. Now, what impact does it have on Bitcoin, and what does it mean that it's going to go up by 25 basis points tomorrow? Well, it means a couple of different things. First and foremost, it means that the Fed is probably getting to the end of their rate hikes. They may take them to 5%. I would not be at all surprised if they took them to 5%. I would not be at all surprised if they took them to 5.5% or 6%. Actually, people might think I'm crazy for that, but I could absolutely see that happening. And the reason is because the economy seems to be doing relatively well, considering the high rate market, considering the downfall of global supply chains, considering the imminent destruction of China or the collapse of the Chinese manufacturing plant. They're trying to see how far can we push this? How long can we keep no quantitative easing more or less and keep raising the rates 25 basis points? So they probably don't exactly have a plan. Do we go to 5.5? Do we go to 6? Do we go to 6.5? They're probably playing it every 45 days. Okay, how did the economy respond to that? Takes maybe 90 days to implement, so they're still seeing how that last 50 basis point rate hike came in, so they're trying to be conservative. They're trying to not be too hawkish and send the market into a tailspin. They see the S&P 500 breaking bullish. 25 basis point rate hike. Wonderful. March 22nd comes around, they'll probably see that again. So what does that mean for Bitcoin? Well, that means that things are starting to slow down that were impacting Bitcoin negatively. First and foremost, the Russian-Ukrainian conflict has pretty much stalled. There is quite a lot of combat going on, but there's not a lot of territorial change going on right now. The main thing is that Russia and Ukraine are getting a ton of new military hardware in preparation for their spring offensives. Come the spring, I'm talking May, June territory, you're going to see a big change in what's happening in Russia and Ukraine, and that's going to be very impactful for the markets. Right now, Zelensky's just over here saying, we want F-16 Fighting Falcons because you already gave us tanks, now we want fighter aircraft. That's kind of the conversation right now. So that is important, extremely important, probably the most important piece of news in the world right now. But it's also news that is not having a tangible impact on markets right now. That is bullish for Bitcoin because whenever the Russians make an advance, that's normally not very good for the global consensus feeling of stability, which is not very good for risk on asset purchasing like Bitcoin. Same thing with the Fed. If the Fed is only raising rates 25 basis points, or hopefully they'll plateau them sometime soon, that's also likely going to be good for Bitcoin. On top of that, looking at Bitcoin through the lens of the SPY and the Dixie, two of the most important variables in the value of Bitcoin, what you are likely going to see is an increased ability for Bitcoin to rally, considering the S&P 500 is in a general uptrend and the Dixie is in a general downtrend. I don't have time to go into all of that today. The Dixie is the strength of the dollar compared to a basket of world currencies. It going down is negatively correlated with Bitcoin, which means when the Dixie goes down, Bitcoin's normally going up. The S&P 500, that is the stock index of the United States stock market that most people look at. That and the DJI, the Dow Jones Industrial Average, DJIA. Both of those going up are positively correlated with Bitcoin as well. So with those correlations going on, it makes sense that we've seen Bitcoin rallying. The question now is, can the S&P 500 continue breaking to the upside out of its current resistance, which you can see right here? Can it continue breaking bullish above this downtrending level of resistance? Will the Dixie continue its march to the downside? Will we see the EFFR sitting at 25 basis points from here on out? What will we see happen with the CPI? Will we see CPI coming in at 6, 6.2, 5.7? We'll see. But how all of these numbers and how all of these variables come together and coalesce is going to really be what determines whether or not Bitcoin can break $25,000 and stay above. Okay. So, your takeaway. Let's make this simple. Pay close attention to the way the market reacts at, when will it be? I think it's around 2 p.m. tomorrow when the Fed makes their announcement. Pay close attention to how the market reacts to that. You can go to cmegroup.com and you can look at their CME Fed Watch tool. Just go type that into Google. You'll find it. And when that hits 0 seconds and they've dropped their announcement, pay close attention to what the market does. If it starts breaking to the upside, you might have an opportunity to make a little bitty long. But don't get too carried away because the fact is we do need a correction soon. All right, let's go ahead and read some chat. Really appreciate all of you guys for tuning in. Morning Bedrock Preacher at Queen. Yes, good morning to Queen. Queen said, I'm seeing green. Finsov Sarah, you know the thing. Yes, indeed. Did you know you can hand feed wasp queen so they associate your smell with food and won't tell her drones to sting you? Really? I'm not going to try that, but there you go. I'm sorry, but 109 plus 15 is not 134. Yeah, you're right. I'm sorry. It's 124. I forgot to carry the 1. Or whatever it would be. All right. All right, guys. Well, I really appreciate all of you guys for tuning in, as always. If you enjoyed today's stream, make sure to go ahead and hit that like button. Go ahead and smash the like button, hit that subscribe button, and hit the post notification bell so you will not miss a single stream. I really appreciate all of you guys for tuning in and signing up for Lux Algo. Make sure you check out Lux Algo. You will be very glad you got it. The link is in the description. Use coupon code Jebb, J-E-B-B, for 20% off at checkout. Make sure to follow us on all of our social media. You can find me with the links in the description box down below. I am going to have to go, though, guys. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.